Mortgage rates jumped as high as 7.65% last week, the highest it's been in decades. But if you know what you're doing, you can still get your monthly payment very close to as if you were getting a 5.5% rate. I'll cover that here in a minute. The number of new listings hitting the market every week appears to have peaked and is now in its seasonal decline. However, if last year is our indicator, overall housing inventory could still continue to increase up until the end of October. How are these high rates impacting buyers? Will prices ever come down, and what does all of this mean for the Dallas real estate market? My name is Michael. I'm a real estate agent here in the Dallas area, and every Monday I give you a weekly update covering all of Dallas and Collin counties. We're looking for trends, which cities and zip codes are the hottest if you may be a seller looking to get top dollar, as well as which cities and zip codes are the coolest if you may be a buyer or investor looking for a deal. We're also tracking mortgage rates as well as mortgage purchase applications, as that's our best leading indicator to what demand will look like 30 to 90 days from now. We're looking at things like median list price, days on market, how many homes are having price decreases, and what's inventory looking like. And if you stick around until the end, it's my favorite part of the video, is the top 10 rank charts of both hottest and coolest cities and zip codes in all of Dallas and Collin counties. If this sounds like something you're into, make sure and hit the subscribe button. And if you're looking to make a move in the Dallas area, whether it's next week or next year, I'd love to connect. I've helped every one of these yellow dots find their little piece of Texas, and I'd love to help you too. Just call, text, or shoot me an email. All that info is in the description below. Okay, today is October 2nd. Let's see what the data is telling us this week. And if this is an old video, click the playlist here and it'll take you to the latest weekly market update. Okay, first up, instead of doing market news this week, I wanted to start by giving you some hope. If you're a home buyer and you believe that now that rates are above 7.5%, it's just impossible to buy a home, you can't afford it anymore, I want to tell you that's not true. I'll be doing a longer video on this later in the week when I have some time, but the key point I'm trying to make is this. I talk to would-be home buyers every week that say, if mortgage rates were down at 5.5%, I would be buying a home today. The first problem with that is, if mortgage rates were down at 5.5%, there won't be any homes to buy because everything will be multiple offers and housing prices will be shooting through the roof again. But setting that aside, I want to show you some real numbers. Looking at a 600K home at a 7.5% rate versus a 5.5% rate, at face value looks like it's going to cost you $750 more a month, which is a huge number on your monthly payment to overcome. But actually, at a 7.5% rate, because your mortgage interest is deductible and you're paying a lot more of it because you have a higher rate, you'll actually end up saving about $220 a month in taxes. So really, we're talking about a net difference on your monthly payment not of $750, but of $530. And if you put just 5% down on this 600K home, then you max out your seller concessions, which is having the seller buy down your PMI and pay down some of your interest rate with the remainder of that balance. Your net monthly payment will only be about $150 more than if you were buying at a 5.5% interest rate. So I know many buyers who are looking at rates and thinking $750 a month is too much, I can't buy a house, when the reality is you can go buy a home today and it could only cost you about $150 a month more than if you were buying at a 5.5% rate, if you know what you're doing. And if $150 a month is still too big of a gap for you, make sure and watch that video later in the week and I'll be showing you how you can easily overcome that. And if I've already made that video, I'll make sure and link it somewhere here at the end of this video. Okay, moving on. Starting out with national housing inventory, the growth of active listings slowed a bit from the previous week with an increase of only 6,808 homes in the country. If you look last year, over here, the seasonal peak in inventory was actually October 28th. So just under a month of inventory increases before we start declining for the year, if last year is our indicator. As you can see, many years it would have already started declining already. So somewhere between now and October 28th, looking back historically, we're going to see the inventory peak. However, if mortgage rates continue to climb like this, I wouldn't be surprised if inventory actually continues increasing for longer than it has looking at all of these years. We may just blow through October 28th. And of course, if mortgage rates decline, I think inventory would start dropping immediately. But obviously, the current trend for mortgage rates is up. Now let's take a look at new listings. We saw another nice orderly decline this week. This is exactly what we expect going through the end of the year. And of course, some weeks like here, you're going to see an increase. Don't be surprised when that happens, but overall, what we want to see is a nice steady decline. We don't want a sharp decline. We don't want this thing dropping off a cliff. This is exactly what we want to see. And if you're a home buyer in the market, of course, what this means for you is every week there are going to be less and less new options to choose from, which means fewer and fewer opportunities for a great home to come onto the market, which means you need to be ready to go when they do. You need to be already working with an agent, already pre-approved before that house hits the market, or you're probably going to miss it. Don't be fooled into thinking just because overall inventory may continue to increase for about a month that you're going to have plenty of time to pick a great home. The homes that are going to be sitting on the market are either overpriced or they're not great homes. We're talking about homes that are in original condition, homes that are used as rentals, homes that have updates but they were done very poorly, and the odds are that's not the type of home you're looking for. So don't let inventory increases fool you. The great houses are still going to go quickly. Now, if you're an investor looking for a rental grade home, you don't mind something old and beat up, then you're going to have plenty to choose from here to the end of the year. The last thing I wanted to cover is the number of homes having price decreases every week, and we're going to look at this. This is national, and then we'll zoom into the local market. So as you can see, each one of these black dots represents 1 year. So you can see very clearly this year, the number of homes having price decreases are way lower than last year. If you look back here, we were about at a third having price decreases every week. 2018, 2019, we're getting closer to a 38%. Of course, these years were an anomaly, but what I want you to see is even with rates crazy high where they are, the number of homes having price decreases is very close to where it was in 2018, 2019, and is still lower than it was last year. Then looking at Dallas County, we have the number of homes having price decreases at 44.5. A year ago, 45.67. And in 2019, 46.37. So in Dallas County as well, there are less homes having price decreases every week than there were last year or in 2019. Looking at Collin County, you see the same thing. We're currently at 49.17. Last year we were at 52.85 and got up as high as 56.2. And then in 2019, we were up to 51.89 at this point in the year. So I've had a lot of people telling me, oh, I'm seeing a ton of price decreases. Well, I'm not sure what you're comparing it to because there are less price decreases this time than there were last year. So we're seeing a totally normal number of price decreases at this point in the year. So if you think the housing market is crashing, this data is not showing it. Okay, moving on to mortgage rates. Last week, we started at a 7.39. We blew through the previous high of 7.49 all the way up to 7.65, and it looked like we were getting some relief on Friday to a 7.44, but I have some bad news for you today. Looking at the 10-year Treasury chart, it is trying hard to continue higher and is already quite a bit higher than it was on Friday. So right here where my cursor is, that is the daily candle close that got us to 7.65 mortgage rates. As you can see today, we are way above that. So presumably, if this candle closes up here today, we're going to be way past 7.65 rates, unless the 2 and 10-year spreads get smaller. Long story short, rates are going to be higher today than they were Friday. By how much? Not sure yet. This makes 21 consecutive weeks of rates around or above a 7%. Now, regarding mortgage purchase applications, we actually saw a 2% decrease this week. So looking back at the last 5 weeks, we saw a 2% increase, followed by a 2% decrease, followed by a 1% increase, a 1% increase, and now a 2% decrease. So we are at total equilibrium on mortgage purchase applications. We go up 2%, we come right back down 2% over and over. This makes for a total of 17 positive, 19 negative, and 1 neutral print for this year. Home buyers are starting to understand that if they wait to buy a home, they could be looking at 8% rates in just a few weeks from now. And it doesn't look like the Fed is going to be lowering rates anytime soon. But remember, your mortgage rate is temporary. The second that rates drop, you can refinance. I also want to take a minute to remind you that new construction homes, some of them are still offering as low as a 3.99%, which on a $400,000 home, at face value, that would save you about $600 a month. And if you want to learn more about new construction, check out this video. But I also want to tell you, just because a builder is offering low rates doesn't necessarily mean that's the best move for you. Some of you will need that low rate to even be able to afford a house, but in order to get that low rate, you're probably paying a higher home price. And then that higher price difference is going towards buying down the rate on the back end. For example, a home that otherwise would have been $400K is now selling at $450K with a 4.99% rate. Well, in reality, you're buying that $400K home, and then the $50K that you paid above that price is all going to buy down all of that interest to get you down to a 4.99 rate. So you get a nice low monthly payment, but what happens when you go to sell? How is your community being priced versus your competitors in the area that aren't offering that low of rates? Because when you go to sell your home, you're not going to be able to offer a low rate incentive for the next buyer. You're going to be pricing your house against the other homes in the area. And at that point, you're going to really care what your purchase price was, not so much what your rate was. So before you get sucked in by a low rate, let's look at the total picture with your situation and all the pros and cons that might come with it, because I have a feeling that some people who are jumping on these low rates right now are going to have to hold their homes a lot longer than they expected in exchange for that low rate today. So again, I'm not saying don't take the low rate. I'm not saying do take the low rate. I'm saying everybody's situation is different and it should be examined thoroughly. Okay, now taking a quick look at the MLS data. Starting with Dallas County, we had 342 closed sales this week. That's 86 more than last week. 286 homes went under contract. That's 11 more than last week. 493 homes listed in the last 7 days. That's 71 less than last week. 86 of the homes that closed this week were immediate sales, meaning they went under contract within the first week. That's 25 more immediate sales than the previous week. And in total, there are 2,091 homes that are either under contract or in pending status in Dallas. That's 73 less than last week. Moving on to Collin County, we had 276 closed sales. That's 44 more than last week. 163 homes went under contract. That's 36 more than last week. 287 new listings. That's 61 less than last week. Of the homes that sold, 61 were immediate sales. That's 14 more than last week. And in total, 1,609 homes are under contract or pending status. That's 76 less than the previous week. So in general, we had more closings, more executed contracts, and less new listings. Okay, let's move on to housing data. Very quickly, if you've ever watched my videos, I use what's called the Market Action Index. It takes all of these factors, puts it into one easy to read graphic. Anything below a 30 is a buyer's market. Above that, we're just looking at how much of a seller's market are we in. We're currently still in a strong seller's market with a number of 46. As you can see, over time, it's just been a slow and steady decline every single week. As rates go up, we get a little cooler, but we are still firmly in a seller's market. Looking at median list price, it took another little dip this week from 430 down to 425. Median days on market remains around 42. Number of homes having price decreases is at 44%. That's a totally normal number for this time of year, as we already covered. Inventory continues a steady climb, nowhere near as fast as we want it to, but it's definitely good news that it's continuing to climb and not dropping yet. Moving on to Collin County, their market action index has actually been slowing on its decline. It's much less of a straight line like you saw in Dallas, and in fact, from last week to this week, we're still in the 45s. We had barely a drop in the market action index. The median list price is holding steady at a 599.9. Median days on market is the same at 42. Number of homes having price decreases actually took a little tick down this week from 50.59 to 49.17. And their inventory has been very flat, a tiny curve up this week, but as you can see, for months it has just been flat. So that's not what you want to see, because we're about to hit the seasonal peak and then that number is going to come down. And what we've needed is for all year inventory to be increasing. Okay, now we're moving on to my favorite part, the top 10 hottest and coolest cities and zip codes in all of Dallas and Collin County. This is using the market action index we just discussed. Starting with the absolute hottest city, number 1 is Carrollton, Texas. Irving heats up 2, Grand Prairie remains. Grapevine cools off 2 spots. Mesquite heats up 1. Lancaster cools off 1. So those 2 switch spots. And then we like to zoom in at the specific zip codes. The absolute hottest zip code is Garland, 75041, followed by Louisville, 75067, Carrollton, 75010, Irving, 75060, Carrollton 75006, Carrollton 75007, Richardson 75081, Mesquite 75150, Garland 75040, and Irving 75061. So those are the hottest cities and zip codes in all of Dallas and Collin County. Now we're doing the exact same thing, but the coolest cities and zip codes. The absolute coolest remains Leonard, Texas, although it's been below a 30, which means it's been a buyer's market for the last few weeks, so it finally jumps out of buyer's market status, followed by Sunnyvale, which cools off 1, and this is also very close to a buyer's market, though you can see Sunnyvale looks to be falling off the map, and Leonard actually looks to be bottoming out just above a buyer's market. So Sunnyvale may be taking over the number 1 spot next week. Number 3, Whitewright heats up 1 spot, Salina and Ferris remain, Van Alstyne heats up 1, Blue Ridge cools off 1, and Rockwall, Red Oak, and Anna remain in their 3 top spots. So these are the 3 hottest cities of the coolest cities list. Zooming into zip codes, the coolest zip code is Leonard, 75452, followed by Sunnyvale, 75182, Whitewright, 75491, Rockwall, 75032, Dallas, 75219, Salina, 75009, Ferris 75125, Dallas 75203, Dallas 75208, and Van Alstyne 75495. So that's your weekly market update. Remember, if you're looking to buy or sell in the Dallas area, whether it's next week or next year, I'd love to connect. Just call, text, or shoot me an email. Thanks for watching. I'll see you in the next video.